let's start with the equity market. Like I mentioned, it was up today. Yesterday was down. Continue to see this, should I say, sideways trading pattern developing. Is it really the earnings season that you think is going to break this pattern?
I think so. I mean, for the past 3 weeks or so, what we've seen is a continuous decline in the equity markets, which isn't surprising. A lot of market commentators sort of, got that one right, which was we saw a heavy rally into the beginning of the year, and obviously there was time to take some profit. So I think that's a lot of what we've seen now. Over the past week or so, it's been a lot of sideways trading, like you said, with the market essentially just waiting for the next catalyst. In my view, just like you said as well, it's the earnings season.
One company that seems investors are not really bullish about is Starcoms, and that's on the back of a deal that should boost its cash flows when it sold some of its infrastructure last year.
Correct.
But we see that stock continue to decline. Do you think it's really more of this idea that many investors are expressing recently, that CDMA really cannot compete in this market?
Correct. I think it's a function of that, and also just investor fatigue in some sense with the name. A lot of people have been burned by Starcoms in the market, and I think where we are now is just one where people almost don't want to hear anything about the name. The company is obviously taking a lot of aggressive steps and trying to become profitable at least for a quarter. It hasn't done that in a while, but I think investors are just tired of the name. People would just rather focus on sort of the GSM names and the bigger players in that sector.
I mean, I'm sure the market continues to look for the day that some of those companies will be listed. But having said that, let's move to the fixed income market now. Bonds, we saw the FGM bond issuance yesterday, and 66.5 billion naira was issued. Obviously, the key thing to note really is that for the 3- and 5-year bonds, we've seen yields come down on those issuances. How has the market reacted to that?
I mean, I think, first of all, if we just take a step back, the volume that they raised yesterday was sort of small. If you just look at what the budget is for the presidency's budget that, hasn't passed the National Assembly yet, 66 billion is kind of small, so we expect that to pick up as the months come by to start with. But market sort of reception for the issue was pretty good. It was very well oversubscribed. We think that where it came out was pretty much in our range, 9.25 for the Feb 2013s and 11% for the April 2015s. Having said that, over the short term, we expect FAC to hit the system tomorrow or thereabout, and that should sort of ease off liquidity in the system.
So what does that mean for the bonds, for bond yields across the curve?
Correct. I mean, if there's a lot of liquidity in the system, then obviously that drives rates down pretty much. Rates also move with bond yields in that direction. So expect prices to go up. I mean, there's money that needs to be put to work somewhere is really what, happens with that. And also if you couple that with sort of the interest rate environment that we see with the CBN, we're in sort of a hawkish environment, that should drive yields further up in our view.
Let's bring in inflation into the equation. Obviously, the National Bureau of Statistics releasing the January inflation numbers, and at 12.1%, up from 11.8%. What does that mean for yields going forward?
Okay, I mean, that is not good for the bond market. Obviously, inflation is never a good thing for bonds. But in our view, these higher rates sort of are more in line with reality. If you walk through the streets of Lagos, you see that, I mean, the rate of price increases is sort of basic items, or even if you go to your gym membership, for example, the way prices go up is nowhere near 8, 9, 10, or 11%. It's, sort of further high. So that's sort of in line with sort of expectations in some sense, and I won't be surprised to see those rates edge further up.
Let's put into context the impact that the market rally we've seen internationally is having on markets in Nigeria. Obviously, foreign investors have become major players here. Right now, they're estimated to control about 70% of equity trading in Nigeria right now. What does the rally that we see, which seems fairly sustainable, mean for a frontier market like Nigeria?
That's a good question. I mean, personally, I'm sort of slightly confused, to be honest with you, because if you look at you separate the international markets into two, so let's say you take the US, UK markets on one hand, and you take sort of the BRICS, Brazil, Russia, India, China on the other hand, they've sort of behaved very differently from what I would have expected. The US, UK markets are up sort of in line with our market, 6%, roughly 6-7% year to date. While if you look at a country like India, India is down over 10% this year. China is barely flat. I think Russia is the only country whose index is up about 5-6% of sort of the emerging market names. So that's sort of surprising if we compare that with the Nigerian equity market. But to answer your question, what you normally see in sort of downtrends or aggressive rallies is sort of increased correlation in markets. So when there's huge sort of sell-off in world markets, the US, Nigerian markets sort of move in sync. on the upside, it's the same thing. If you ask me, I think that correlation will break down in the sense that I expect the U.S. market to take a breather while Nigeria sort of rallies further from here.
All right, we'll see how things play out. So, your general expectations for any season, any major surprises you think we might see, perhaps from the banks?
Okay, I mean, from the banks, I don't expect that much of a surprise. Where I expect a surprise is really the consumer names, just because raw material costs are ridiculously high all over the world. So I'm not as bullish on those names. But I mean, if you talk about the banks, if you talk about every other sector, I think the earnings season should be a pretty good one and should give some support to the equity markets.